Alright, good morning and welcome back inside my screen and to this channel. This is the Trading Edge with MJ, and as we all know, every week I always come out here to very much analyze two or three pairs. Uh, if I don't analyze, I always call maybe a trade or something. So today is 13th, yeah, and last week I had an analysis, or before last week I made this analysis on USDJPY and USDCHF, and I said these pairs are very much bearish. So if you are trading from the higher time frame, from the higher perspective, you understand that these pairs it has broken a very strong resistance level, and it broke the neckline. I'm talking in respect of USDCHF. Whenever it broke that level from the past historically, whenever it breaks that level, the neckline, it always does a bounce, retrace, and start crashing. And this is what it has done, and it traded from all the way from that level since February 2025 till get to the support level, and it has broken that support level. This is a very strong support level. It has broken it, and it is now crashing further. Based on the outlook on the pair, I noticed on Friday and on Saturday some of the classes I had, some of the Zoom session I had with people under my mentorship. I called the trade saying all I will be waiting for is for retracement. Once I see a retracement that is close to the support that is now acting as a resistance, I will start shorting again. It's very much simple. Multiple time frame analysis or top down analysis is you being able to very much zoom out. Once you zoom out on any pair, you see them from the higher perspective, which is the higher time frame. From the higher time frame, you scale down to the lower time frames. The lower time frames are where you come to get your key levels, and these key levels are very much your entries. It's simple. You go to the higher time frame, the monthly time frame. Sometimes I scale to the 3 months time frame if the pairs are very much scattered and overwhelming, and for me to see the obvious turning points, because support and resistance are turning points of the market. Be it you're trading either gold, crypto, currency pairs, USD quote currencies, and base currencies. There is always this place whereby when the market gets there, it turns. The first, the second, then the third one, it's always going to break that level. Just like USDCHF has broken the support and it is now retracing and tanking down to a new support. However, for me to start entering this trend, I have to wait for the support to get taken out. For it has taken out now, I'm waiting for pullbacks to enter that, to ride the bearish trend again. This, my bias is very much bearish until I see it trade above that support again. And this support, I plotted these levels from the weekly and the monthly time frame. This is a very strong support. So whenever the market gets this, that does one or two things: either breaks it or it turns from there. And this is how trading is all about. Trading is you being able to forecast, see the overall time frame. Once you see that, then you deposit and equip your capital and allow the market to do the heavy lifting for you. You can't always be in the front of your screen analyzing and forecasting. You can't move the market. Your job as a trader is you being able to identify a trade. Once you identify a trend, you equip your capital and allow the market to do it for you. Then you sit down. If you're a swing trader like me, all you have to do, maybe check your trades 3 times a day or once every day, because you already have a very long term TP point, take profits, or a very long time break even point. You don't need to be in front of your screen any longer. All you have to do is, maybe if you want to add positions, like which is what I do, that's why I check the trades at least 3 times a day. If I have a running position and I feel there is a need to add to these positions, all I have to do is just to monitor, sit back and monitor. Once I see a pullback, this is where I start buying or start selling, adding to my positions. This is how you use leverage. Leverage is not meant to be used when you are lost. No, you don't use leverage. This is what most people get wrong, because they tend to add to losing positions. You only add to positions when you are in profit, when you are in the blues. This is when you go about sizing in. Let's say you start with 1 lot size or 0.50 lots, then you are in position which is, let's say, you risk 100, and on your 0.50 you held that trade and you are in 500, then this is where you add extra 1 lot to that position, especially if you're a swing trader and your TP is very much, maybe it's going to run for a week, and on the third day you see a very nice entry, you add like a one lot size. If it's still going, add 1.5. This is how you go about sizing it. You don't just start from 0.50 and you rush to go and add a two lot. No, because you don't want, when the market is retracing, for you to clean all your profits. No, all you have to do, you have to add with your brain. This is how you sizing in a trade. You start with 0.5, or you start with one lot. From one lot you size into 1.5. 1.5 you enter two lots. From there, this is how you go about scaling and using your leverage. Leverage is there for you to help your capital, to help your account. That's why it's called leverage. It is something you step on that gives you balance. You don't want it to give you chaos, because one thing about leverage, it can make you well, or it can also break you. So being able to know when to use them at a given particular time, or at a very nice setup, is actually what's going to help your trading career. So now I'm going to very much enter my screen and share it, and I hope you stick to the end of it, and I will see you when we're done. If you have anything, drop it on the comments, and I will see you on the next one. So let's go inside my screen. Bye. Alright, so we'll come here. This is inside my screen. As you can see, I've already mapped out my key levels from the higher time frames. It's very much, this is USDCHF, and what I'm waiting for, it's a pullback to this level. This is where I want to start shorting, either here, here, and here. But then I still have to refer to where it started on the monthly time frame. The monthly time frame is where I saw this overall market move. This is a monthly time frame, and this is the whole of April, as you can see from the start. Now these are turning points of the market. As you can see, this is the first resistance, this is a triple top. As you can see, the first touch, the second, and the third touch. So this is where I got to know, okay, this pair is very much going to tank. When I noticed, for you to know anything that is happening, you have to look at your left. When I looked to left, I saw this. I saw the neckline was broken, and I waited. I had to make sure what is going to happen here is this. When it breaks this neckline, it's tanks to the downside. Likewise, second time, this, third time. So once I saw this happening, I knew that, oh, there is no brainer. This is just very much going to repeat itself. And again, for me to spot out these levels, I had to look left. This is a very major turning point. Whenever it breaks, if it breaks this support, it's going to come here. Another turning point is this, and if it breaks here, the next level is this, and if it breaks here, the next level is this. Remember, this is very much the monthly time frame. And how do I get to enter is go to the weekly time frame. The weekly is very much where you want to plot out your obvious key levels, the turning points that is very much going to guide your activity in the trading. In your trading, as you can see, this is the first touch, the second touch, the third. What happened is, when it got here, it broke below, tested this neckline, it started crashing. The same thing happened here, it tested it, it tanked. Same thing, when it got here, broke it, tested it. I started calling this this short position. I entered, made my first entry here. I took some partials when I got here. This was a whole week trade. Then I waited for this spike. I entered again, and I took some partials here, and I've not been on it because I closed it because I was waiting for it to get to this level, bounce off it, and I'll start buying, just following this long move. However, it got here just like the first, second, and the third touch, which always most times breaks a level. And look at what happened. It broke it, and when it broke it, look at the level it came. The next turning point is very much broke it too. So now waiting for a retracement for me to start selling. I will only start selling when, if this movement is very much below this support. That's why I want to, from Monday, Tuesday, I want to see what it does from here. On the daily time frame is where I set myself for entry. I'm prepared. As you can see, this is making a kind of, I want to see a retracement, a pullback. However, the pullback must be below this strong support and this turning point. If the pullbacks if the pullback enters above it, then I won't be shorting. My buyers will very much change to either buying, but first I'll have to wait for this high to be taken out for me to start buying. However, I still have a very much long bearish outlook on this pair. As you can see, I'm waiting for pullbacks, then I enter here, move my stop loss very much above here. My overall target is this point. However, when it gets here, I'm going to break even. My overall target is this. However, when it gets to this turning point, I will break even, take some partials, and allow it to still tank further. This is my overview on USDCHF, and the next pair I have in my watch list is the USDJPY. It's very much the same move because they are two both correlated pairs. Is you being able to understand what it's happening in the market in general, and my entry point is usually the 4-hour time frame. I want to see what the 4-hour time frame. As you can see, there is a kind of lower high, lower low, lower high, lower low. So I want to see it. I want to make sure the new low, the new lower high is very much below this massive support. In as much as it's still below here, my bias is very much bearish. I want to start selling. I will have to wait for this retracement to get completed. When it gets here, test this level and start tanking. This is where I want to start selling. My stop loss is very much going to be above the support level that is now resistance, and the overall target is very much below. This is where I'm going to break even, and that's it for USDCHF. Next pair I'm going to look into is this USDJPY. I want to make sure when I'm trading USDJPY, I have the same bias with USDCHF because they are both positively correlated pairs. As you can see, I entered this position, I rolled it through here, I took some partials. Now I'm waiting for this retracement. As you can see, I'm waiting for this retracement. This is where I want to enter another position to the downside, which is a very strong support. How did I get here? Same thing applies. Go to the monthly time frame. The monthly time frame is very much where you go to see the overall picture. It's just like you looking back, zooming off. Just like a sniper, you have to zoom off to see the overall target and the general thing you're moving. As you can see, this is a very strong support, and this is the first touch, the second touch, and it's coming to make the third touch. However, when it gets here, it might break below it. So just like what happened in USDCHF, this is a next turning point, and this is also a next turning point. So until then, my bias is very much bearish. On the weekly time frame, I'm seeing something like this. This is it. As you can see, this is a pullback crash. I'm waiting for another pullback to start crashing. However, USDJPY most times doesn't give you that pullback, but unlike USDCHF, USDJPY I've come to understand that whenever it wants to crash, sometimes the crash might be very fast for you not to have that pullback. That's why I have also a new strategy that I use in jumping in on the trend if the trend is about to run, and I'm sure that's very much going to play out the way I analyzed it previously. So on the daily time frame, this is what I'm looking for. On the daily time frame, as you can see here, this was a turning point. It has been taken out. When it took out this turning point, I waited for it to get to this point, this level. I bought from here, moved my stop loss here, and my overall target is very much this. However, here I still have this open position. I've taken some partials. My stop loss is very much resting here, and I want to enter another position when I see this pullback get completed on the 4-hour time frame. I want to see a pullback to this level, make some range, a little range, then I'll enter to the overall target. It's as simple as that. On the 4-hour time frame is this is what I'm looking for. As you can see, it's already happening. I want to see this. As you can see, this is the first leg, the second leg. I want to see the third leg, which has already taken place on Friday. So I want to see this candle. Once this candle closes on Monday, I want to see another new 4-hour candle close. Then I will start selling, move my stop loss here with the position I have already, and the overall target is very much this. And when it gets here, this is where I'm going to change my bias to either buy or continue selling. I will only start selling when it starts tanking very much below this level. Then the next selling target will be this, and when it crosses this, There is another one for that. So this is it for these two pairs analyzing today. Next week I still have other pairs, which is USD quote currencies, GU, EU. I have a bullish bias on those pairs. Likewise, gold, but I have to wait for pullbacks because those pairs are very much running right as we speak. This is it. As you can see, this is a turning point. It got close to it, and I'm waiting for a pullback to enter to this upside. Likewise, on USDJPY, is a turning point. I'm waiting for pullback around this level to start buying again. So is it for it today. We'll see next week, and if you have any question, do to pin it down. I'll do justice to it when I see them. So thank you, and peace. All right, thank you all for sticking through the end of this analysis, this brief presentation. As you can see, it's very much simple. Trading is simple if you know how to simplify your trading. You don't have to, as you can see my screen, there is no what they call it, the Bollinger Bands, the orchestra, the all these indicators. No. Those things are just like spider webs on your screen, and those things are very much going to confuse you. If you understand how to simplify trading, when you simplify your trading, seeing a setup won't be your problem. Because one, before I enter any trend or before I ride any position, first is I have a context. I know, am I buying or selling? I don't have double context. Before I enter that position, I already know that this is what I'm going to do. I want to sell this pair or I want to buy this pair. So it is very much going to help me. If I'm selling, I'm looking for sell opportunity. And if I'm buying, I'm looking for buy opportunity. I don't sell when I see a sell position. I don't buy when I see a buy. No. I have a general context. I have a bias of this is the overall trend. I want to sell this pair. All I have to do is to stick to that. Even if it's, let's say you're a scalper, you just have a context. You don't need to buy when it's buying or sell. No. If you want to sell, sell. If you want to buy, buy. This is the market. The sales it's almost on the equal scale with the buyers. Someone needs to buy for someone to sell, and someone needs to sell for someone to buy. So you have to have a place you belong. If you don't have a place, you are very much going to keep blowing your accounts, and at the end of the day, you might say this is a scam or something like that, because you don't actually understand yourself. Trading is you once you have a strategy, because you can't. It's just a strategy is just you being told. Is an information that is given to you through someone online. That's an information for you to go and make do with. Then once you have this information, which is a strategy, you start working on yourself first. You work on yourself for that information to work for you. It's just like when you teach someone how to drive. You teach them how to drive, you teach them everything that is required, but for them to be a good driver, it has to do them. You have to build yourself. You have to know, okay, am I supposed to drive with or without a seatbelt? Is wrong. Am I supposed to exceed my speed limit? Is wrong. These are things you do in trading too. You have a strategy, you stick to one, because every strategy there is no 100% strategy. You lose, you win. This is a game. There is no 100% strategy. Some strategies are way more simple. Just like mine, it's very simple. Analyze on the higher time frame, execute on the lower time frame. Have a context. You have the strategy, now have a context. How do you enter? Before you enter, what do you see? Do you see A? Do you see B? Do you see this? Make sure you're seeing something and say, okay, I'm entering because I'm seeing this. I'm seeing a break of structure. I'm seeing a retracement. I'm seeing a pullback. I'm seeing it has touched a minor resistance. It has touched a minor support. Like, something has to be there for you to say, okay, I'm making my move because of this. So this is very much it on this presentation today. I hope there's something to take home about, and if you have any question, you know what to do. Drop it and follow us for more, and I will see you next week. Peace.